99 out of 100 term policies don't end up in your beneficiary's bank account. Why is this? Would you rather have a $250,000 life insurance policy with a 1% chance of going to your loved ones, or 25 grand of whole life with a 100% chance? That's tough. There's a reason why insurance carriers are loaded with cash. If we get this wrong just because we wanted the cheapest policy, you're going to be laying in a casket looking down at a family all types of pissed off because they thought they were getting $250,000 and in reality they're not getting a thing. So now what's happening? Now they're doing a GoFundMe. Now they're mourning without peace of mind. Your health dictates everything. If you're paying an insurance company $20 a month and they're offering you 200 grand, does that make sense to the insurance company? These carriers do not want to cut checks. They want to cash checks. It's the most important product we buy, and we have to get it right. We have to get it right. What is up, guys? Mike DeSecco back for another timeless talk. I thank you very much for tuning in. I hope you're smiling and enjoying your day. We are at the end of 2024, an amazing year for pretty much everything in my life. We are having a baby girl, so that's awesome. Our business is starting to really grow. The seeds that were planted, years back are starting to sprout, and that is an amazing feeling. Not as good as the baby girl about to sprout, but it is nice to see hard work pay off. 2025 is going to be an amazing year. We're starting it off with our annual convention in Irving, Texas. And my company, Timeless Protection, we protect vets. We are gaining traction and people are starting to notice what we're doing, and that we're out here trying to do right by our veterans and consumers. So we're just going to keep cranking out content. If you have not hit the like, please hit it. Hit the subscribe, hit the bell. Give me a Michael Jordan game winner and a Tiger Woods hole-in-one. We'll start it out like that. Two of the best, two of the most clutch of all time. What I want to talk to you guys about today is term coverage. So don't fall asleep. There is actually some good facts in here. You might even think I'm lying to you, but I'm not. What my company does, and this plays into term coverage a lot, my company safeguards consumers, mainly vets, when it comes to searching for life insurance. If any of you guys have searched for life insurance, you know it sucks and you don't know who to trust. You don't know what product is good. There's fine print all over the place. And what ends up happening is we just go with the easiest, best sounding plan. Big mistake, huge mistake. So term coverage. Let's just quickly go over the three types of life insurance that there are. You have whole life. It lasts your whole life. So whole life is permanent coverage. They are of the smaller nature unless you've got an endless budget and you are very, very healthy. But for the most part, whole life policies are anywhere from 5 to 50K, and they pay out 100 out of 100 times if the client is paying the premiums. And this is because the policy never expires. They also gain cash value at a fixed interest rate that can vary carrier to carrier. Usually it's 4 or 5%, somewhere in there. So there might be a time where you need to borrow money, pop a couple tires on the truck, want to go on vacation, whatever. You can borrow it from your whole life plan. But if you do not pay that loan back and you pass, they're going to deduct that loan from the death benefit that they give the family. So that's whole life. Permanent cash value, price never changes, policy never expires. Then you have term life. Term life is for a set period of time. Term. Think short-term parking, right? Usually 10, 20, 30 years. There are a couple carriers, I believe, that'll go to 40. I'm going to break down misconceptions of this product because there are a ton of them. Term coverage tends to be very inexpensive if you're healthy. And that's the kicker with term is you've got to be very, very healthy to get it. Now, with the crowd that we try to help, veterans, right? You got PTSD, burn pit issues, Agent Orange. Like, it's very tough for these guys and girls sometimes to get, a big old term policy. But Term would be generally used for, say, mortgage protection or to just carry a huge death benefit while you're younger, where whole life policies are generally used for burial costs. You can't put a term policy in place if you want it to cover your burial. That would mean you have to die before your term is up for it to pay out your family, and that's not what you want. The third type of coverage would be universal. Universal life is like term life and whole life having a baby. You get larger coverage amounts like a term policy, but then you get the cash value, permanent nature of a whole life plan. A lot of these plans are indexed. They are attached to the stock market. Now, we don't have securities licenses. I don't have a license to lose anybody money. And these plans have floors, they have caps. But for the most part, if done properly with a solid agent, and you fully understanding the product, indexed universal life can be a very powerful tool if you can qualify for it. Now, that's the biggest thing people don't understand about life insurance. If you can qualify for it, most people just think because the dumb 995 guy says you can get the coverage, they just think they can get any type of coverage. Doesn't work that way. Your health dictates everything. The easiest comparison is when you go get auto insurance, they run your motor vehicle report, right? They want to see speeding tickets, DUIs, accidents, whatever it may be. And if there's none showing and you have a great driving record, all the carriers will be willing to give you coverage at a good rate. Toss in a couple speeding tickets, some carriers are going to drop off. Toss in a DUI, most of them are going to drop off. So now think about that with your health. We check MIB reports. So the carriers take a peek at your MIB report, which is like your driving record for your health. Now, prescriptions, procedures, surgeries, these are like speeding tickets and infractions. Your DUI would be cancer, if that makes any sense, right? So these carriers are smart. What I want to share with you about term coverage are the big misconceptions. Now, you've got your Ramseys of the world that say whole life is just a scam, it's stupid, you should always get term, blah, blah, blah. 99% of term policies never pay out. I'm going to say that one more time, loud and clear, and I'm going to repeat it probably 50 times during this video. 99 out of 100 term policies don't end up in your beneficiary's bank account. Why is this? You think I'm BSing you. I'm not. I could care less what product gets put in place. I'm not impartial to anything. I go where the situation and the health takes us. I don't just recommend a product. If you're 20 or 30 years old and you want to do a physical and pick up $500,000 of term coverage for $25 a month, $30, whatever it is, cool. Makes sense. Do it. But do you not think you're going to outlive it? Right? So is it wrong to carry? No, not at all. Not at all. Could you do other things with the money? Possibly. You could invest. You could actually use indexed universal life in this case where your money would be growing for you. So term coverage, the ideal situation would be, married couple, breadwinner, whether it's the male or the female, whoever it is, you guys have a house, 250 grand left on the mortgage, whatever it may be, or maybe it's a new home and you got a $300,000 mortgage. The breadwinner of the house, if that person doesn't show up tomorrow, meaning they die, well, at that point, what do? Does the spouse who either was maybe the homemaker or part-time worker or had a job that didn't, create or benefit, that didn't generate the same amount of income as the breadwinner, what are we going to do? This is where a life insurance policy on the breadwinner would come in to play. So the average age of an adult American male is 75, 76. And for women, it's 77, 78. If you pick up a policy for $100 a month and it's a 20-year term and it ends at the age of 60, are you most likely going to outlive that policy? Yes. So $100 a month times 12 months times 20 years. Add it up. When you outlive that, a term policy turns into something called annual renewable term life. So if you have a term policy at your house right now, go dig it out, pull it out of the bottom drawer of the desk or the lockbox or a fireplace, wherever you have it tucked away, and flip a couple pages in, you're going to see a page that's got policy years, policy premium, policy death benefit. And then if you look, you'll see the premiums stay the same for a decent chunk of time, and then it just skyrocket. Well, this is when you outlive your term, where it skyrockets right there. So if you're watching this video and you have a term policy, that policy was issued because the carrier did due diligence. These companies are not stupid. These carriers are here to make money, not pay death claims. So while it's nice to have a $500,000 term policy, there is a 1% chance it's paying out. Again, is it right for certain situations? Absolutely. There is a time and a place for every policy. Term policies have living benefits. Living benefits help you if you have a chronic or critical illness. Say you have cancer or you have a stroke and you can't work for 8 months. Mortgage company doesn't care. They want their payment. At the end of the day, we need to make it. So how do we protect our mortgage? Mortgage protection life insurance. Mortgage protection life insurance is term life. So it's not some special mortgage policy that if you die, some random check goes to the mortgage company. The beneficiary could go to Disneyland with the check and not pay the mortgage off. Would we want to be smarter than that and handle the house? Obviously. But it's not just a product meant to just go pay your mortgage off. So these companies will issue term, and a lot of term is fully underwritten. So here's what happens when people see ads for term coverage or any type of life insurance. If you see a price and a coverage amount in the ad, how often do you think that those hold true? Never. They never hold true, ever, because they don't know your health. Your health dictates everything. Remember this. Your health dictates everything. So I go look for whatever, $150,000 term policy with living benefits. I have a $50 a month budget. They're going to look at my med charts, health, lifestyle, credit, driving record. They're going to then put me up against the law of large numbers like every other Mike in the country and then table it. And they're going to look to see how long I'm 99% going to outlive a policy. So if they're 99% sure I'm going to live 15 to 20 years, they'll offer me a 10-year term at X amount of dollars. And also with term, the length of time you can have it depends on your age. Like the older you get, the shorter the term length that will be available. If you're 70, you can't get a 30-year term because you would have the policy till you're 100 years old. Now here's a big misconception. Whole life is so much more expensive than term. You got to ask yourself this question. What's more expensive? Having a smaller policy that 100% will go to our family, or paying into something for 30 years and getting nothing out of it? Ask yourself that question. And if you have term coverage, again, you don't have the wrong policy, but there's probably something better out there. Or it's the right policy until it expires, and then you go look again. Again, it's not some awful product. It's not some, thing that you need to run and get rid of. But when we explain things to folks, us as Americans, we are trained to shop most for the least, right? So when we go shop, we hit the sale rack. We want the greatest thing ever for dirt cheap. But life insurance doesn't work that way. Life insurance is calculated. They know. They're smart. These carriers do not want to cut checks. They want to cash checks. One of the biggest mistakes, again, maybe the biggest mistake, is buying the cheapest life insurance. Ask yourself this question. If you're paying an insurance company $20 a month and they're offering you $200,000, does that make sense to the insurance company? No. The only way they issue that policy is if they are damn sure you're going to outlive it. So you say to yourself, well, how do they know you're going to outlive it? They know. Based off statistics, they know. These people, these professionals, algorithms, actuaries, guys, there's a reason why insurance carriers are loaded with cash. It's because they're smart about what they do and they're careful in what they approve, especially with term. Here's the other thing with the niche that we work with. To qualify for term or universal, indexed universal life, you have to be very, very healthy. And there are two types of underwriting for term. There's fully underwritten term, and then there's simplified issue term. I personally would rather stick to simplified issue than go fully underwritten. I would say less than 1% stick for fully underwritten. Now, USAA is notorious for doing this to vets, and USAA is a fine company. And again, everybody has their preference. I think every insurance carrier on planet Earth has bad reviews or people talking crap. And with all the stuff going on in the health insurance side of things right now, with what happened to the CEO of United Healthcare, these companies they're huge. They're huge, they're big, they're rich. So you have to be careful in who and how you pick it. We have to leave our family a death check. We absolutely have to leave them a death check. And I understand that we all want to leave the most amount of money we can for them. This is a question I ask every veteran I'm on the phone with, and it really gets your mind going. Would you rather have a $250,000 life insurance policy with a 1% chance of going to your loved ones, or $25,000 of whole life with a 100% chance? That's tough, because I want to give my family $250,000. So am I that 1 out of 100 that's going to leave my family that money? I can't take that chance if there's a mortgage, if we don't have anything in place for a funeral. I need to make sure they get money. And if it's not the amount of money that they need, we've got to get very tactical with what we can get. With term, again, if I've got vets who have ever had cancer, if I have a vet who has ever had a mini stroke, heart attack, anything to do with the heart, valve replacement, pacemaker, stents, everything, you can't get term life. You may be able to find someone that may give it to you, but it's going to be for 10 years and $900 a month. When we explain this to people, this is why the company motto is educate, advocate, serve, because most people don't want to talk about insurance. It's a taboo subject to talk about. It's the most important product we buy, and we have to get it right. We have to get it right. If we get this wrong, just because we wanted the cheapest policy, you're going to be laying in a casket looking down at a family all types of pissed off because they thought they were getting $250,000 and in reality, they're not getting a thing. So now what's happening? Now they're doing a GoFundMe. Now they're mourning without peace of mind. There's a lot that goes into purchasing and looking for life insurance, guys, other than just, hey, that looks good, let's buy it. So this is why I try to stress to people, our credibility speaks for itself. We're not going to steer you in the wrong direction. In fact, I got hung up on twice yesterday for telling the truth. Most people think that just because I'm telling them something, that the next ad or the next company is going to have some magic policy for them. They don't. It's not out there. The more and more we can spread this message, the more and more we can put people in the right coverage. I'm never opposed to tacking on some permanent and some term, but at the end of the day, that's what universal life is. So why not put it into one policy? All going to be a matter of preference. Financial advisors and my cousin's uncle's sister's financial guy told me that term is shut up. No. If you don't have an insurance license, you do not want to dive in and start talking or giving advice about insurance. It is the worst product to believe your uncle's, cousin's, second sister's, mother's, brother's, husband's dog. Like, you can't do it. You cannot believe that person. You want to believe someone who's talked to thousands and thousands of vets or consumers over the years and seen every health issue, every housing issue, every situation, we just bought a house, we just refinanced, we're about to be done, I've got rentals, I've got this, I've got that, I want to cover this, I want to cover that. Like, this is where seasoned, proper, trusted, proven agents come into play. And this is why veterans come to us, because we are direct. We're going to tell you, listen, I know you got on the phone wanting $200,000. But because you've had multiple heart attacks and you had cancer 5 years ago, even though you've been cancer-free for 3 years, yes, right now you are healthy, right now. Carrier doesn't care about right this very second. They care about the last few years. And they want to know when you're going to pass so that they're not wrong if they issue the policy or deny the policy, because they want to get that money too. Just like any type of life insurance policy, women with term especially get much, much better rates. term coverage underwriting, they take a lot more lifestyle into their factor here. So if a guy rides dirt bikes and acts like an idiot all the time, or, I don't know, whatever type of crazy job, the rates are going to be higher. Whereas women tend to be a lot smarter than men when it comes to activities and adrenaline junkiness and, all that craziness. And they also live longer than us. So they're going to have better rates. Now with the VA's whole life plan that came out last year, it's unisex rates. And these rates are men's rates. So a woman veteran is getting rated as a male and has to wait 2 years for her coverage. The private market will hold that policy for $40, $50 less a month and kick in immediately. It's these small things. So another thing about term coverage is if you look at your policy, usually it's on the cover and it depends on the carrier, but it'll say term to 85 or term to 95. You have to go with a private, underwriter, private company if you want to have a policy that stays the same price for X amount of years. Like AARP, Globe Life, True Stage, their term policies increase in price every 5 years and then drop you at the age of 80. Which to me is criminal. But if you go private, like I can write you a term policy that doesn't change in price for however many years the carrier's okay issuing the term. When we hit that year, your policy starts to skyrocket, like I was saying earlier, but it will skyrocket until you're 85. Let's say we're 50 years old, we get a 20-year term. So we're 50, we get a 20-year term, and it's a term to 85. From 50 to 70, the premium will not change. It'll be the same exact price. But from 70 to 85, the first year might be bearable. Second year, it'll probably tell you, your gut will probably tell you you're paying too much, and then you'll be shopping for coverage. Now, hypothetically, yes, it could last till you're 85 years old, but this is why 1 out of 100 term policies pay out. Is because no one's going to pay that much money. No one is going to pay that much premium. Now you have to justify shopping for coverage 20 years later, looking at whole life or something permanent because you're all pissed off that the term just expired. And now you're going to be paying double the amount in premium for probably less than half the amount you had when you had term coverage. So the hardest conversations we have with people are when they have a term that is skyrocketing. And now, hey, I'm going to offer you 25 grand in whole life and it's $15 more a month than what you had for $250,000 worth of term. Again, there's a reason why that stupid cliche statement, you get what you pay for. Yes, that you can slap that right across the term policy. That should be the slogan for term coverage. You get what you pay for. There are term policies, however, they're called ROPs, return a premium. At the end of the day, they're pretty solid. Essentially, it's just like a savings account. So every bit of cash you put in, if you outlive it, they give it back. The carrier saying to you, we took your premiums along with everybody else's premiums, made a bunch of money, and we're okay giving you 25 grand back or 30 grand back or whatever it may be. So is it better than having your insurance policy just go poof? My team and I have to keep vets away from all the misleading ads. We have to keep veterans away from inexperienced agents. Nothing against an inexperienced agent, but you're not going to get the proper coverage from someone just out here trying to slam commissions. Just doesn't work that way. I spoke to a veteran today. We've hired a lot of vets again, and he basically said, educate, educate, educate. You can't sell. You can't be forced to sell. You can't be forced into anything. Veterans especially are just going to tell you to F off. The reason why the sales philosophy here is sell by not selling is because we don't want to sell you anything. I can't stand the word sell. Let me give a quick recap. Term coverage. It's not permanent. There's no cash value. It's inexpensive, large coverage amounts. You have to be very healthy to get it. And 1 out of 100 end up paying out. And if you do not believe me, fact check it. Fact check it. You may see some that say 1 to 3%. Ooh, 3 out of 100 pay out. Let's go on the high end and say 5 out of 100 pay out. Are you sure you're going to be one of the 5 people that die before their term is up? I hope it's not up before you're like 70, 75 years old. But now you're going to end up having to shop at 70, 75 years old or 80 years old. And that's not ideal. So term coverage is good in certain spots, definitely good while we're younger. But when we're over the age of probably 60, you want to look for permanent coverage. And if you've ever had a health issue, here's a huge problem. I dealt with this a couple days ago. I let my friend who has an insurance license, or her cousin's brother has an insurance license, handle all this stuff. And they came out and they did blood work and they did a physical. And now I got declined and I can't find any coverage. Well, did they ask you about your health? No, they just sent the people out. Well, tell me about your health. Well, I'm diabetic. I have neuropathy. I had cancer back in. Why are we looking at term coverage? Instantly, the C word, bye-bye term. Again, you may find somebody who wants to give you some term, but for 10 years and $9,000 a month. Like, let's be practical here. We have souls. When premiums get high, we curl up in balls. We need our vets saving every dollar they can. We need our vets not overpaying for anything. Huge mistake is going fully underwritten, meaning people are going to come take blood and they're going to check to see if you are very, very healthy. Your mom, your dad, your dog, your cat, your hamster. They're going to see if every living species in your house is healthy. And 0.0001% of those quotes stick. Select quote, notorious for it. Hey, we'll get you $1 million for 14 cents. Think about that. You have a 500-pound person sitting on a couch with an oxygen tank sitting next to them. 17 Oreos in their hand, a cigarette in the other hand. They think they can get $1 million worth of coverage for $14 a day or whatever. You can't put pricing in advertising. It's not fair. It's not fair to do to that Oreo-eating, remote-holding, Dorito-loving, huge person. There's coverage out there for them. There is, but not that coverage. Why would a carrier do that? Do you think a carrier would offer the Oreo Dorito guy $1 million for a cheap price? Is that smart? It's like giving auto coverage to somebody with 17 DUIs and a vehicular manslaughter. Oh yeah, sure, we'll just give them coverage. You're gonna pay a death claim. You're gonna pay an accident claim. You have to think before you just purchase life insurance. Oh no, I got it taken care of. Do you? Do you? I have plenty of life insurance. It's not about if you have plenty of life insurance. It's about, do you have the right damn life insurance? You can have plenty of insurance all day long. You could have a $50 million policy. If it doesn't pay out, why do we have it? And what does it matter? Guess what? The 500-pound COPD-loving, cigarette-smoking, Oreo-eating, Dorito-loving guy is going to end up in a whole life plan that will pay out. So, COPD Dorito Oreo guy has a policy that's going to protect his family if he talks to the right people, by the way. And Mr. Joe, ego, I think I'm awesome, I'm going to protect my family with $1 million worth of coverage, doesn't understand that the carrier's like, we'll approve you because we're 99% sure you're going to outlive it. These are just small things, guys, that I just feel that they're important to know. I'm a straight nerd when it comes to this stuff. And it's not even about the insurance. It's the fact that I care about people and I care about families and I care about my vets, especially. Veterans deserve the best of everything. Don't get me wrong. There are obviously a handful of bad veterans, but for the true blue men, women, patriots of this country and the ones who served this amazing country we live in, they deserve the proper guidance. They deserve transparency, gaps in communication from the VA. And I'm going to finish with this right now. So SGLI is Service Group Life Insurance. That is a policy while serving. Veterans have 240 days after they're discharged or retired to convert the SGLI to VGLI without showing or proving health. Nobody knows to do that. I'd say 1 out of 1,000. I'm never going to sit here and rag on the VA. The VA helps a lot of vets, but they have to communicate better. A company like mine shouldn't even exist. A company like the guy we just hired today, where they fight for disability ratings, shouldn't exist. We have to get in front of our vets and we have to help them understand why and what we're doing. I think we're going to start trying to get webinars going to where vets can join in and learn about these things. There's no better job on the planet than talking to a vet. I spoke to a woman yesterday. Her husband took out a policy. Her gut told her they were overpaying. And boy, oh boy, were they. They were overpaying by, I think, $211 a month. If protecting your family after you're dead doesn't matter, if you don't really care based on the certain situation, you don't need coverage. But if you're going to end up purchasing, the first thought cannot be, let me go find the most coverage for the least amount of money. We see it a lot with IULs, and IULs are meant to be funded. So if somebody says, oh, I want that policy that's going to give me money while I have it, but I want the cheapest payment I can get, they take and grow money from your payment. So if your payment is small, what is going to grow? But you don't know that, because every ad tells you, here's some cool policy that you can have and you can get money out of it. Stop and think, guys. These insurance carriers are not stupid. So I'll keep doing some videos like this, but the nightmares we see, and again, stay away from anything in the mail. Stay away from anything that doesn't have a proven, credible, reviewed agent along with it. Any of my team members are going to look at you and tell you the same thing I just did. Why? Because it makes sense to them. Why? Because they're very straightforward and professionally blunt. And why? Because we care. We have souls. So if you guys have any questions about anything, put them in the comments. My phone number is below. I want to say thank you again for all the criticism, all of the comments, all of the help, all of the wonderful feedback. 2025. Hopefully this time next year, I have more than 47 followers on YouTube. Maybe I'll have 57. I don't know. But it's been an amazing journey so far this year. I'm super excited that I'm having a little daughter. We just bought some sick little Nikes today. They're like this big, and I'm just very blessed right now and very happy, and definitely never thought I would be happy in an insurance profession. But the way we roll and our perspective here allows us to help a lot of people, and we want to protect those who deserve to be protected. That's our vets first and foremost. So you guys have a blessed night. Appreciate your time. Love you all. Thank you very much.